Buffett's top 5 financial metrics to find winning stock. What if you could see stocks the way Warren Buffett does? He doesn't just buy hypes or trending names. He looks for companies with strong fundamentals that can grow, survive downturns, and generate cash. Today, I'm breaking down Warren Buffett's top 5 most important financial metrics when picking a stock. I will explain each one in simple terms with real-life analogies and examples. By the end of this video, you will be able to evaluate any company like a pro. First, increasing revenue. The business is growing. Revenue means the total money a company makes by selling its products or services. Think of it like your monthly salary. If it keeps going up every year, it means you are doing something right at work. Buffett looks for companies where revenue is growing steadily over time. This tells him the business is expanding its customer base or charging more for its product. Example, Apple has grown its revenue from USD 215 billion in 2016 to over USD 394 billion in 2023. That's a long-term demand in action. Second, increasing profit margin. The business is getting more efficient. Revenue is good, but how much profit do you keep after all the expenses? That's your profit margin. If you make RM1000 selling nasi lemak but spend RM900 on cost, you only earn RM100, and that's a 10% profit margin. Buffett loves companies that are becoming more efficient over time. If profit margins are rising, the company is either reducing costs or raising price or both. Example, Microsoft has consistently improved its operating margin over the past decade by shifting to high-margin cloud services like Azure. Third, ROIC more than 15%. Is the business using its capital wisely? ROIC stands for Return on Invested Capital. In simple terms, it measures how smart the company is at using the money it has from both shareholders and borrowings to generate profit. If you invest RM100 in a store and earn RM20 ringgit profit, your ROIC is 20%. And that's great. Buffett looks for companies with ROIC consistently above 15%. It tells him the company has a strong business model that can reinvest profit efficiently. Example, Visa has maintained an ROIC above 20% for years thanks to its high-margin payment network. Fourth, ROE above 15%. Is it rewarding shareholder wealth? ROE is return on equity. It tells us how much profit the company generates using shareholders' money only. If you put RM10 ringgit into a business and earn 2 ringgit profit, your ROE is 20%. The higher the ROE, the better your piggy bank is working for you. Buffett likes company with ROE above 50% over many years. It signals strong profitability and efficient management. Example, Nestle Malaysia has historically delivered ROE above 60%, showing excellent shareholders' return. Fifth, free cash flow yield increasing and consistent. Is the business a cash machine? Free cash flow, or in short FCF, is the money a company has left after paying for operations and maintaining its assets. It's like the cash you have left at the end of the month after all bills are paid. FCF yield equal to free cash flow divided by market cap. It tells you how much value you are getting for each RM1 ringgit you invest. Buffett loves companies that generate consistent and rising FCF because it means that they have real money to pay dividends, do share buybacks, or reinvest. Example, Berkshire Hathaway has strong and rising free cash flow, which lets Buffett make smart investments without relying on debts. Final example, who ticks all the boxes? One example of a company that checks all 5 boxes is Visa. Revenue growing year after year, profit margin consistently strong, ROIC well above 15%, and ROE consistently more than 30%. Healthy growing free cash flow yield, that's the kind of stocks Buffett would love. high quality, capital efficient, and built to last. Now that you know these 5 keys Buffett-approved metrics, start looking at stocks differently. Don't just buy what is trending, buy what is solid. If you find this helpful, don't forget to like, comment, and share. And check out my playlist for more stock investing insight, including industrial property trends in Malaysia that follow the same principle. See you in the next video. Bye!